Tyler, NuScale Power, ticker SMR, the small modular reactor startup companies, getting a lot of interest from investors again. We figured it was time to make another video, take a look at what's going on, and talk about what the opportunity is with NuScale, but also another way to invest in NuScale, but also bolt on a really good, important other business as well. And then I have an alternative if you want to benefit from the growth of nuclear and benefit from the entire energy transition in some pretty proven ways. You ready to dig in?
Look, man, you sent me out to dig deep into financials, so I feel like we're exactly in the place we're supposed to be.
Yeah, this is going to be a good conversation. I'm Jason Hall. That's Tyler Crow. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. It's fool.com/unscripted. Go to that special link and you can get access to The Motley Fool's 10 best stocks to buy right now. The Fool has a very long track record of successful stock picks. If you're looking for more, go to that special link. Again, it's fool.com/unscripted. Go check it out. Okay, Tyler. So what's going on with NuScale? Where's their business? What are they trying to do? What's their progress?
NuScale Power is, we'll call it an innovative or an iteration on nuclear energy these days. Its ticker SMR is basically the acronym for small modular reactor. It's the idea that making nuclear reactors that are considerably smaller than the current ones. The theory is that the way that we have been building nuclear reactors for so long is building massive facilities is not cost effective. And the small modular element of it is, look, we can build the reactor in a factory and you can build your building and we can do it much faster. We can do it more efficiently. It should significantly bring down costs. That's the theory behind NuScale Power, and has been working on its modular design for many years. It has a approved design from the regulatory bodies in the United States for one of its designs, although it submitted a new design.
It actually just got approval for that too. The NRC has approved for, I believe it's a 50 megawatt, which was their original design. And this new one is 77 megawatts. So again, Tyler, like you said, comparing it to what's in the field today in terms of nuclear generation, even though it's really been decades since we've built a new nuclear power plant from the ground up in the US, these are orders of magnitude smaller by design.
So globally, the most popular design that's used is the Westinghouse AP1000, which more or less represents 1,000 megawatts of production capacity at any facility. So when you compare that to the 77 megawatt facility at NuScale Power, kind of gives you a difference in scale of what we're talking about here.
But again, it's by design. The idea is to have them more decentralized, to have it lower the unit cost. That's another thing, right? Power production cost. That's one of the challenges, getting them to be more cost efficient. One of the ideas of the design is to help them potentially be a little easier to get regulatory approval, because you're talking about this much smaller footprint and the potential risks, being able to control them more. But sure, there's a couple of designs that regulators have approved, but we're still well short of commercialization.
Yes. Again, everything that we just mentioned is still an on-paper theory on why this should work. They have not yet actually built a facility to these specifications. It's been working with a electric utility in Romania, NuScale Power has, to test this idea, but in terms of actually reactor on the ground operating using a NuScale Power design, we don't have it yet. But the market or investors seem to be very, very excited about the idea of NuScale Power taking off, because what have we been talking about for like the past year when it comes to AI is this idea that power demand is going to grow so quickly over the next several years and kind of break the model that we've seen of power generation in the United States, that we need a lot of other options. And small scale nuclear reactors, perhaps coupled with data centers, seems to be a theory that a lot of investors are attaching onto. And you can see it in NuScale Power stock. I mean, the stock is up 300% over a 1-year period. The company has a $10 billion market cap without actually commercializing a product yet.
The timeline, this is important. It was 2017 when the NRC first accepted the initial standard design for the 50 megawatt unit. And here we are, 2025. The design has been accepted for the 77 megawatt unit. The company's been consistent that their plan commercialization is 2030, right? So we're still 5 years away. Super high risk. We have to acknowledge that, just as we do with other companies that are pre-commercial. Until you actually demonstrate your ability to manufacture sell, service, install, and recognize revenue and generate hopefully profit from your product, there is a substantial amount of built-in existential risk for a business like that. At this point, companies has lived off of the reality that investors have bid up shares, and it's been able to do secondary offerings and other things to raise capital from investors. That's how it's generated money. 5 more years is going to take a lot of money. There's a lot of risk involved. Now, there's another way to invest in the idea that this could be a winning investment. It could be a winning business, but you can also bolt on a really good other business along with it. And that's with a company called Fluor that a lot of people have never heard of.
Yeah, a few minutes ago, I mentioned NuScale Power having a $10 billion market cap. If you go to Yahoo Finance right now, it shows the market cap of $4.8 billion. The reason is because NuScale Power has 2 classes of shares. All of its Class B shares are owned by construction company Fluor Corporation, and they own a significant, more than half of NuScale Power through this dual class shares. That at this current moment, the value of Fluor's ownership in NuScale Power is roughly equivalent to the total market cap of Fluor. And so you have this very weird situation where Fluor, the engineering and operating company, a good operator, a company that builds LNG terminals, chemical facilities, big build construction company, perfectly fine business, something that's been going on for years, but certainly not a massive company, is just sitting on this massive equity stake in a nuclear company that is worth billions and is now trying to monetize that. Basically, you can own shares of Fluor and have a decent operating business on top of basically owning half of NuScale Power.
Here's a quick slide. This is from Fluor's August earnings presentation, just for those that aren't familiar with the company. It's been around for a long time. Its corporate legacy goes back over a century. $16 billion in revenue last year. And the vast majority of that is in construction services, engineering. There's a lot of maintenance services. It's deep in the energy industry and the utilities industry, including servicing and maintaining nuclear facilities. This is a massive international company. About 45% of their revenue comes outside of the US, but they do things in infrastructure as well. You think about the energy transitions. We talked about it with nuclear, natural gas, power transmission as renewables increase, the infrastructure spending broadly outside of just the power grid. This is a really big, important company. Now, the stock fell recently. Their backlog is shrinking a little bit, and there's a lot of cyclical things there, Tyler, that I think aren't necessarily emblematic of a problem with Fluor, the business. The cycles happen. They come and go. The capital cycles shift. They ebb and flow. And also because, well, Fluor's large institutional investors are very aware that a substantial portion of Fluor's market value is tied to NuScale. Since August 1st, since earnings came out for Fluor, Fluor stock fell largely on a lot of those guidance things and issues with its backlog. But over that same period, NuScale stock is down like 30%. Guess what? Fluor stock's down about 27% along the way too. So they've become kind of coupled together. But I think the key here is that it's a way to own a really important business that's tied to the energy transition in Fluor and also get exposure to NuScale if you're bullish on NuScale, but without putting all of your chips just on this very risky startup business that's still at least 5 years away from being able to commercialize their only product.
Yeah, and Fluor has the kind of the flexibility to perhaps sell a little bit of that position to either meet funding needs or monetize it when, say, for example, NuScale Power's stock looks really expensive relative to when it's actually going to monetize this, and can use that as an opportunity to return value to Fluor shareholders by selling off stake. That's actually one of the things they announced on their recent earnings, is they're going to sell about 15 million shares, which should bring in about $600-700 million for Fluor that it can basically use for corporate purposes or buying back stock in Fluor and paying dividends. It's a unique way to monetize the NuScale Power asset without banking on this company being the most profitable thing imaginable in 5-6 years.
Yeah, I think that's a good way to think about it. The downside here is investing in Fluor as a way to get exposure to NuScale doesn't make it a risk-free way to invest in NuScale, because if NuScale doesn't pan out, there could be negative consequences for the value of Fluor. That should certainly be acknowledged, depending on how much of their stake they continue to own versus what they decide to do with monetizing it over time. So I think that's worth considering. I want to put another option for investors out there that are looking for an even lower risk way to get exposure to nuclear as part of the energy transition, and a business with a proven business model that's done an extraordinary job in renewables, but now also has some exposure to nuclear. That's Brookfield Renewable, ticker BEP, and Brookfield Renewable Corporation, BEPC. They're equivalent ownership of the same business. The short version here is this is a company that since 2010, the stock is up almost 600%, 575% in total returns. Great dividend growth story. The biggest part of that business is owning wind and solar, largely utility scale. They do have some distributed, but largely utility scale. They have some hydroelectric assets as well. And on the nuclear side, owns a little over half of Westinghouse. Tyler was mentioning Westinghouse. This is the de facto standard for nuclear power plants around the world. A very, very important business. Brookfield Renewable owns half of it with some Brookfield other entities. And then the other half of it's owned by Cameco, which is one of the most important companies in the nuclear industry in terms of supplying fuel. So that whole ecosystem gets tied together. So the Brookfield entities are really good at making money and they're really embedded in this. I think the thing that's compelling to me about Brookfield Renewable right now is whereas with Fluor, maybe there's a little more risk tied to the valuation because of NuScale and the value of NuScale, the market value. I think right now you can buy Brookfield Renewable for pretty compelling price. It's not deep value, but it's on the cheaper end of where I've seen it over the past 5 or 6 years. That dividend growth story is a great way to supercharge returns, a little bit safer to get exposure to nuclear as part of the energy transition.